Okay, let's get started here. I want you to meet that young lady there. She's a very old lady. She's already in her nearly fourth year, right?
Yes.
So, you know, here is not how old you are, but it's how long you have been in the program. So he's the baby of the program. These are the babies. You are the babies too. She's the old lady. Okay? This course is designed to give you a good survey of AIS and Handling Information Systems. And it's actually going to be taught by everyone. Okay, we have 9 faculty members teaching AIS or with AIS interests, and each one going to teach what they know, okay, what they are specialized. So this is a view of our syllabus, outline view. And so I'm doing this introduction to the literature, and then I'm going to be talking about continuous auditing here somewhere. Yeah. Okay, and then Professor Kogan will be talking about semantic modeling and design science. Professor Issa, who just went to get coffee, but he'll be back, will be talking about this area of research which he calls exceptions and government accounting. Professor Moffitt, who is our text mining expert, is going to talk about text mining. Text mining actually used to be a purely AIS field, but now there's a lot of text mining in the accounting literature. Do me a favor, put your names in front of you, get a sheet of paper, put name, so I get to know everyone. I realized I didn't do it last year and I didn't know anyone's name, so this year, I know your guy's name, you don't have to. Okay, just big letters because I don't see from there. It's just like this. Okay, write my name here, and fold it like this. Okay? So Professor Moffitt could talk about text mining research, eye tracking. Last year, he brought a device that you can look into it and it tracks your eyes moving. Okay, let's see if he does that this year. Professor Sue, let's see if I say this right, Sue Show, but we call her Sue, there, and she'll be talking about machine learning. Professor Brown is going to be talking about behavior research, and she's going to do that together with Professor Thomas. And then we have a treat for you, happened last year too, Professor Glenn Schaefer, who used to be our last dean, and he's the guy who developed this field called Dempster-Schaefer curves. We'll be talking about evidence theory, which is part of that. And actually, Schaefer developed this theory, but Professor Raj Srivastava, University of Kansas, have been doing much more work than Professor Schaefer done, and you'll get the chance to meet Professor Srivastava for sure. He comes here all the time. A good friend of ours, works with us a lot. Okay, then I'm going to talk about continuous auditing that we have been developing. We'll be talking about XBRL research, and Professor Alice is going to talk about literature and about the processes in auditing and et cetera, in research and et cetera. So you're going to get a view of pretty much every professor in the AIS area. Am I missing someone there? I think we have it. So I don't know if that's good or bad. But it's not going to be very bad. And each one of us is going to ask you to do different things, requirements, and you have to seriously read everything in advance. And any questions you have, you ask. Chow here, and she will respond. She's very good at responding emails, etc. You missed it. I talked about your dissertation this morning. Don't look like that. That was fine. Okay, so I think let's start. I have some slides here. Let's go and talk about slides. That's Professor Issa. He is capable to drink more coffee than anyone.
If I get injured now, I will be feeding coffee from.
Thank you. No, that's fine. Okay, this is, in order to pass this course, you have to know his name. His name is Mochi. Mochi, and he's the only dog in the world with his picture on his shoes. Okay, and he's a very famous guy. He has 18,000 followers in Instagram. Okay, and he was Mr. St. Patrick's Day in the Instagram calendar and 6th of January. He has 2 pictures of his in the Instagram calendar. Not of last year, the year before. I don't know this year how he did. Okay, so he is very famous. And so you see some pictures of him. Actually, I joke about this, but I put, in many of my slides, I put pictures in the middle because attention spans are very narrow. And so if I break it and try to control the attention span in the teaching. So that's what it is. This morning, he wasn't too happy because he has the toe was hurting. Yesterday we were out in Long Island, and I put the socks on it and put a Band-Aid around it, Band-Aid, rubber band around it. So he was trying to pull it out. So he was in bad mood this morning. But I took him to the Apple store. Okay, I live next to the Apple store in Manhattan, and it was a big mistake because I went down to the elevator, I walked in, and there were rapidly there were 200 people around taking pictures of him, and he hates it because the flash bothers his eyes. So people pointed, he went like this. Pointed the other way like this. But now there were people all around, he couldn't avoid it. So not poor Mochi. Okay, first I'm going to ask you a question. What is this thing called AIS, Accounting Information System?
Jamie raised his hand a bit more shy.
My guess would be accounting information systems is the management of all the information relating to accounting in a business.
I don't know if it's the management, but is about information in business, but in particular accounting information. And so it's like technology and information. And actually the way we define this more is by showing the areas that we do research, and I bet you there'll be other areas that do this. I'm editor of a journal called Journal of Emerging Technologies in Accounting, and it's one of the AAA, American Accounting Association journals. And we've done surveys of what we do and etc. And there are really actually 2 sections of the AAA that speak about technology. One section is the IS section, publishes JIS, Journal of Information Systems. I was editor of it 4 years ago. And there is this other journal called the JATAN, which I was editor now, and I was editor before. And so these are journals that publish articles, and there is a whole range of articles related to technology. Actually, when I started teaching in accounting, just after my PhD, people didn't really think computers belonged in accounting. And actually, I was the first person listed there used to be a directory of accounting faculty and the alias, and I was the first or second person listed as systems. But today there are if you add the membership of SET and membership of IS, probably close to 1,000 people doing IS. And there are job ads saying looking for AIS professors and etc. And it's very interesting because in my early years of teaching systems, teaching in this area, a lot of the faculty used to say computers have nothing to do with accounting. And I would answer, every company has a computer and put their accounting computer. Why it has nothing to do with accounting? Okay, but these days you don't hear that very much. Other people do think it's weird. So we have to get used to that. But the areas of research are going to cover. And what I think happens, I wrote an article that was published talking about this. It talks about accounting as a discipline and AIS in that discipline. And what typically happens is that we start working on something like text mining, and progressively the other fields pick it up. So text mining is very big in market research these days. You extract a lot of textual data on, for example, Facebook utterances, or et cetera, and progressively more and more text mining in financial accounting research. Now, there are many studies with text mining variables, and it is becoming much bigger. And several other fields in accounting has become progressive in AIS became part of accounting. And that's the argument that I typically make. First question, guys, this is a dialogue, this is not a monologue. So if you don't answer, I'm going to ask to you. So be courageous, there is no harm done. Whatever you say is not too hard. Has ability to access data changed accounting? Ben says yes. I like this. But how? Can you tell me some ways? Let me get the marker and go this side. How has data access changed accounting?
Some of the long past days, we introduced the ERP system and it connected to the whole accounting procedure and including auditing.
Okay, so first
start to the ERP.
Introduction of ERPs. Let me just give a little introduction to them. Do you know what the ERP is? No. No. Yes? Have you ever heard of software called SAP or Oracle? Yeah, these are, in the old days, systems were developed as we call file systems. You had payroll here, and then you had 2 or 3 magnetic tapes with the data that you need. Then you had costs, was a different thing here, and a couple of tapes here. And then you had general ledger, and you would have separate systems here. And what finished up happening, these things duplicate the data and finish up being not coherent. We'd have different data. I was head of data processing at Catholic University of Rio de Janeiro for 2 years. Finished my PhD, had to go back to Brazil because of the J2 visa. And so I was at Catholic University of Rio. I started the MBA program there, and they made me head of the Rio data center, largest computer center in Latin America at that time. Okay, and we had a system that was a register system, which registered all the students that were taking courses. And then we had the bursar system that registered if I paid my tuition or not. When we tried to merge the two data, there were 10% of the people that paid tuition and were not registered. And there were about 60% of the people that were registered and were not paying tuition. That's pretty bad, correct? Turns out that the people that were paying tuition and not registered, basically they were registered, but they got married, changed names, there was name change kind of thing. Turned out that the people that were registered and not paying tuition, these were people that this was Catholic University, there was a very religious gentleman there who waived tuition to everyone. And the university was having big financial problems, and no one was paying tuition. So when I discovered this, I ran a merge of two files and gave them the list. Give me the list of who is not paying. And they would say, this guy has a car, how can he not pay tuition? Big deal in Brazil, have a car at that time. His father owns a store, how can he? So they fought, the Jesuits fought. And my premium for discovering this was that I was put in a committee that I had to meet every single student that was not paying tuition and have a discussion with him. I managed to escape, I have to tell you this. But this were called file systems. And progressively, particularly because of thing that they call the Y2K crisis, which is when we became year 2000, year 2K, 2000, fields didn't work right because people were putting only 2 digits. Then it was 99, then became 00, and 99 is larger than 00. And that was one thing. There are a lot of little things like that happened. And so people developed this idea of an ERP. ERP stands for Enterprise Resource Planning System. Enterprise Resource Planning System, which basically have a database in the middle. We call it a relational database. And general ledger, payroll, cost, registrar, bursar, all of them work in the same database. And what that allows you, you don't have data duplication, is much better. But it creates a layer of software around your data and has all kind of interesting implications onto data accessibility. Because from one second to the other, your financial systems are not separated from your payroll system, for etc. So you can run all kind of analysis and all kind of accounting. So that's a big effect. And then the second question is, how do accountants deal with data-related concerns, such as security and privacy? Does that have anything to do with accountants, the security of data or the privacy of data? Why?
Well, if it's not secure, people can alter it and create fraud.
Okay, so that's the one thing, is concern for the integrity of your data for you're preparing your financial statements. What else? These days, there is a thing called cybersecurity risk. What does it mean? That someone hacks in your system and steals all your data. Yes, no, maybe. Have you ever heard of Russians going into the election process of the United States? Have you heard about companies having data stolen, like all the customer records and etc.? Well, that's that could take the company bankrupt. If that could take a company bankrupt, you have a going concern risk. Going concern means company might go down. So I'm part of a committee called ASEC, Assurance Service Executive Committee of the AICPA, American Institute of Certified Public Accountants. And what we have just done in the last few months, developed principles of criteria of cybersecurity. And why are we doing this? Because we think that the auditor eventually will have the ability or will have the obligation to tell the public within the going concern consideration if there is a big cyber risk in this particular company. Now this is a whole other discussion that I think I'm going to have with you in a couple of months about cybersecurity. But there is a considerable concern these days for cybersecurity, and some of us think this is auditing. Now, I could tell you a worse story or a less nice story, is CPAs, or the institute, is thinking that this is a source of income. This is a way to make some more money. And so they would like the auditor to be able to issue analysis on cybersecurity. We are talking about creating a master's of accountancy here with an emphasis on cybersecurity. So it's kind of connected. And the institute also have issued guidance for privacy. They call it GAP guidance, General Accepted Privacy Policies. And then the next question is, has the nature of the data processing changed? I already gave you a nature change here, going from file systems to ERPs. But before this, where were we with data? How was data collected and accumulated?
By hand and paper.
By hand and paper. And before that?
By brain.
Huh?
By remembering in the brain.
Actually, papyrus and cave writings.
Yeah.
We had maybe 10 years ago or 5 years ago, we had, you will know,
It was like 5 years.
we had a historian come to the American Accounting Association national meeting that said that most of the sources of writing were for accounting record keeping at the beginning. That was the big motivator. Of course, I bet you doctors would say was for medical reason, and economists would say for economic analysis. So everyone would say their field is that way. But that it was, you saw it was interesting, wasn't it?
It was very interesting.
Yeah. But actually the interesting thing is the one thing about computer records. Computer records can be much more voluminous than manual records. They're easy to accessible. So what does it finish? You keep accumulating more and more information about your transactions and your financial way. So it's easier to collect large amount of information, easier to retrieve it. And what does this feed-forward effect means? The feed-forward effect is now that you can do this, you start doing new kinds of things. Feed-forward. Now you can collect it with computer, you can put it in magnetic tapes, you can read them very fast, you can do payroll by computer, and doing payroll by computer you can do all more complex type of things. Okay, this is something that people are talk very seldom about. Is accounting is a field of business measure. Have you ever thought it that way? When you think about accounting, what do you think? About double entry. Okay? You don't think that what the real objective of accounting is measuring business transactions. No, it's measuring the business. You measure transactions to measure the business, but you don't measure the business to measure transactions. Do you understand the difference? Yes? No? No. Okay. What's the purpose of, for example, doing double entry? Is to know your business. Okay? You don't do the business for doing the business entry. The purpose is understanding what the business does. Now, there's actually a very recent article, maybe last year, interesting article by Alan Sangston. And Alan Sangston, a professor in England, published in the Accounting Review. And he was looking at Pacioli's work. And his book is called Summa Mathematica, was published in 1492, and is considered like the originator of double entry. Okay? Now, in reality, Pacioli didn't invent double entry. Pacioli actually discovered what the Venetians were doing already for a while, and cataloged. And interesting, the name of the book, Summa Mathematica, means mathematical summary or mathematical aggregation. And so at that time, doing double entry bookkeeping was mathematics, was serious mathematics. Okay? But what you have to understand is that he was measuring business. That was the purpose. What were the businesses at that time? What were the two big problems of business at that time? One was inventory. What assets they had to sell, okay? And the other problem was debt. Who do they owe money and who owed money to them? Particularly because the Venetian merchants and then Florentians and Italians had this whole network of traders in different places that owed them money, or they owed money to them. And so the reason they did that bookkeeping that they are doing was to measure how the business was doing, and progressively the authorities said, if they're measuring how business they are doing, we can tax them on how much business they are doing. Before that was very difficult to tax. So it's idea of measuring business. Now I want you to make a little effort and tell me today what kind of things are worth measuring in a business. Is inventory interesting? She's saying yes. Do you guys agree? Yeah, we still have physical inventory. Not everyone has it, but many have. Is that interesting? What else is interesting? Come on, you're accounting students.
Fair value.
Okay, now you're getting fancy here. You're talking about methods of measurement. Fair value, historical cost, current cost. No, don't retreat. You're right. Okay, what you're talking is these things are important to measure. How do you measure them? Okay, you know, when I started doing my doctorate, we had theory of value, we had all this accounting theory stuff. No one takes this anymore. You haven't taken any thing, did you? We used to have theory of value, classic measurement theory. You know, my dissertation advisor was Professor Ted Mock, and he was professor at UCLA when I was there. Then he moved to USC. So when I came back from Brazil, I went to work with him. And Ted, at that time, was writing, did a AAA monograph on accounting measurement, and was works by Sterling, Fadzangle. You never heard of these names, okay? These were the grand lords of accounting theory at that time. And I used to say, I love you. Ted, your book is great, you see. Don't say this to your advisor, it's a bad idea. I said, I put it next to my bed. When I can't sleep, I read your book. He didn't think it was very funny. Okay, it was very boring, this stuff. And I find myself, 4 years ago, wrote an article about a measurement theory with him and Silvia Romero, who was one of our students. So your tastes change. And I thought, now I think measurement theory is extremely revealing to what we do. Okay, and we need to go back to some of that work. But, so you said measuring inventory, measuring debt, I guess we are in agreement. You talked about methods of measurement, evaluation, good. What else is interesting to measure? The most important thing you didn't say. No, I don't know, most important. Huh?
Trademark.
Okay, so that's a little bit out of this. Totally important to measure, but I'm looking for exactly accounting measure. Trademarks, stay with that. We're good talking about that. Yeah, profit, correct? Okay, and why do you need to figure out profit?
Because growth in profit is a signal for growth in a company can be calculated by growth in profit.
That's a fancy answer to, am I getting richer or I'm getting poorer?
Yeah.
Correct? Okay, so inventory, debt, income. Is there anything else that is very good to measure, important to measure? No. Costs. Why do you need costs? For what he was saying. You need costs to be able to figure out what you're earning. What is an earnings? Earning is what costs you in relation to what you can sell for. Subtract one of the other, you have a gross measure of earnings. Still the very, very accounting issue. Now, you raised a very interesting issue. You talk about intellectual rights, okay? And it's not only intellectual rights. There is human resources. There is value of the supply chain. There is all these things that companies do today has a value. Brand.
Customer database.
Customer reputation.
Even just what you have at the user database. Like for example, WhatsApp, when it was purchased mainly because of its user base.
So we're going to put data here. In this case, customer data. Okay. So the value of a company, and okay, now I'm going to destroy your faith in market research. Okay, I don't know. I won't manage to that because you have Professor Suresh to convince you otherwise. Not Suresh, Bharat. When I was doing my PhD, maybe a little bit before, so I don't make myself so old, there is a classic study of market. Okay, what is the classic study? Earnings. This study basically did market value of a company equals a function of earnings. Let's say earnings per share and other accounting values. And at that time, the R square of this was around 60%. Adjusted R square. So accounting variables explain 60% of the market value of a company. Now when we get people visiting here, presenting papers, what is the R square that the people present with 20 variables, all kind of extra things?
20 variables.
Huh?
20
A lot of variables. So what are the values that if they are good, 5%, 6 to 4, etc. What does this tell you?
Bad econometrics.
Huh? Okay, you can blame the econometrics. Maybe regression doesn't know what's doing. No, we don't say that. But in one sense, you're right. It is bad econometrics, but let's see, what does basically is say? Come on, guys.
Market value contains more information than before.
Oh, and what is this market? What else does it contain? You said part of it. What did you say?
Like, except besides the accounting information, the market value can be affected by other information.
And what is that? You talked about trademarks.
Yeah.
Actually, you know, when Bill Gates talks about Microsoft, he says, our value is our people. Okay? And then you start thinking those patents that they have on Windows and et cetera, are worth something. Right? And Apple's patents are worth a lot. Correct? What else? Walmart's supply chain is worth a lot. And actually, I would say that the number of companies, if you would select very carefully asset-based companies, physical asset-based companies, you would get Ball and Brown's number. I should have said it. Ball and Brown, this is the famous paper, is the father of all market studies. Ball and Brown's number would have gone substantially higher for asset-based items. I don't know if it would go these days for more than 10 or 15%, but it would go. Now there is a professor at NYU called Baruch Lev, okay, and several of his PhD students developed research methods that added variables here, and so I don't know if we call it bad econometrics or not, but proxies for brand value, for intellectual property value, etc. And he actually managed to get substantially higher relationship between variables and market value. My son is an analyst, a buy-side analyst in an investment bank, which it's value-oriented. It's not a hedge fund or something like that. So they buy stock, parts of companies, and they just sit on it for pension funds. So this is not, hedge and trade and etc. They buy and hold it for years. Okay, and I bet you he says that less than 50% of the information he gathers is from financial statements. Okay, and he couldn't put a number on that, but he visits the company, he looks at the market, he looks at the competitors. He has and so maybe he's calling it bad econometrics. It could be because this is an incomplete relationship. Okay, but what this basically is telling you that the information sources for accounting are much wider. And the other thing is you go to these ERPs and look at them. People don't manage their business anymore on financial statements. They manage their business on all the other systems that they have. Financial statements are just basically created to make the SEC happy. Okay? And I was talking this morning about the agency model, because I was talking about auditing. And the agency model, have you all covered the agency model already? No, you look very quiet. Okay? This is the principal. This is the stock owner. Okay? So this is the owner of the company. This is the agent, is management. Okay? Management knows a lot about the company. The principal knows very little about the company. This is called information asymmetry. Much more information here than here. In order to resolve this asymmetry, companies publish financial statements. And these financial statements could be real, could be fictitious. So they need a third party that guarantees that that assures that those statements are reasonably stated, fairly stated. That's the auditor. They also need people to manage this, so that's the board of directors. And the board of directors typically is composed by external members and internal members of the company. And the external members is to basically keep this process fair. And if you look at financial statements today, you'll see that financial information is only a part of them. The actually annual statements are full of other information. And why do they give that? Because the stockholders want to know more about the company. And the incremental cost of providing it is very low compared with the old days where you would have, I was telling you about Janine Knauf's dissertation, where she collected, oh actually it was another class. You collect a lot of information. In the old days, you had to go to libraries where they had the financial statements and manually extract the data. And now, you know, it's available everywhere, so there is tremendous availability of information. And it's a cheap way to tell you about the company and to market you to buy stock of the company, which is obviously what management wants to do. And so what accounting today is, accounting is a field of business measurement. However, we still tend to think accounting as just purely financial measurement. Auditing of financial statements, only financial. You're not auditing what they say about personnel, not auditing about what they say about patents, have nothing to do with it. It's just these measurements here are made in accordance to GAAP, generally accepted accounting principles, and you have to remember what general accepted means. I mean, not everything is in the FASB rules. There are a lot of things that just ways people do things. So that's the scenario of measurement, and accounting is even unavoidably moving to measure other things. And some of the things that accounting is measuring, like Hussein was saying, is or at least should be measuring, is what are how rich, how deep are your data stores?
Because
Yes.
one more thing that I want to add. Also, something else changed with business measurement is the speed and the frequency of business measurement. Now you can have it in real time. You have dashboards, which was not possible in the past. Now, even for management as well as for the users, there's real time dashboards where you can, like the KPIs with companies we work with, they change immediately as soon as anything happens in the company. They can see it. It turns red, it turns green, etc.
Yeah. And of course, guys that would said in the old days, computers are not part of accounting, would say the dashboards are not part of accounting either.
But it is highly used by internal auditors. It's used by other people in management, for
Financial
example.
management.
Financial management in the company.
Yeah, yeah. And so actually the concept has changed. And then there's this question that Hussein introduced. I didn't pay him to do this. Has the locus of measurement, meaning where you measure, have the variables to be measured, and has the frequency of measurement have been changed? Now, I have done research on this area of continuous auditing since I was at Bell Labs in the 80s, in the mid-80s, okay? And what we there advocated was this idea of auditing a company all the time. But in order to auditing a company all the time, you need to measure it all the time. Meaning, if you don't measure something, you cannot audit it. What is auditing? Come on, say something.
The assurance of a financial statement.
Huh?
The assurance of a financial statement.
But that's a redundant statement. Auditing is assurance. It's like saying motherhood is motherly. Now, what is? Use another word, because we usually use those similarly. You are in the right track.
Yeah, it makes sure that the data in financial statement is true.
Yeah, it's a verification process. It's a verification process. And there are this internal and external audit, and they are all basic to give confidence to the users of data that the data is right, or better said, is not very wrong. Okay, so that's the purpose of, and I typically talk, just to complement what Mr. Wu was saying, I call assurance an umbrella. This is supposed to be an umbrella. Please believe it as an umbrella. Okay, an umbrella of a series of assurance processes. One is the traditional audit. The other one maybe is the internal audit. Third one could be cybersecurity assurance. The fourth one could be systems. There are many things that you do that you could do or you do already to tell the public or to tell management that the data that you are presenting is correct. Meaning you always think about auditing as this third-party service here that you provide externally. But there's a huge industry that's internal audit. And why does a company have internal audit? One reason is to decrease the cost of external audits. So instead of paying 5 times the salary of someone to a third-party company, you just hire someone to do that work. Second reason is that management has other needs of assurance. And very often they ask internal audit to go and examine a certain thing. And it's expensive to do externally. So that's just part of the assurance function. Okay, and then the next question is more analytics. Has the new data analysis technique affected accounting practice? And the answer, not very much yet. Hopefully pretty soon. Will the emerging analytical approaches modify the nature of accountants' work? Okay, I'm going to actually jump off here and show you something else. Okay, and Hussein's seen this. I always talk about this. And you have heard a lot about big data recently, correct? What is big data?
A lot of data.
Good. I was hoping that someone said that. Yeah, big data is a lot of data. And people talk about the 3 V's, the 4 V's, the 5 V's of big data, but the thing to think about is a lot of data. And why is so much data available? Huh?
Because of computer, the use of computer.
Because of use of computers facilitate and make the cost of data collection cheaper. Okay, so there is no question computers facilitated it. What else?
Regulations.
A whole set of angles of business were misbehaving or the government felt that could require record keeping. Okay, anything from pollution standards to financial reporting to labor data for the labor government. And the reason the government could ask these things is because became cheaper to collect. What else? Why do we have big data? So We have computers, it's cheaper to collect the data. What else?
Because the amount of data on the internet is increasing and increasing day by day. So we need a set of new technology to analyze so much data effectively, so that the information user can find the usable data in a short time. It's a kind of
I agree with you. Data available went up dramatically outside the company.
yeah, I mean it's like a new process of data analysis.
A new process of data sourcing, of where data comes from.
Yeah.
So a lot of companies built their databases out of literally typing the data in, etc. And progressively other forms of information are emerging that link to that data. So that's exactly what we are going to talk here. So traditional data, how did the company, now with computers, how did the company used to collect their data? They used to get the data somewhere and then type the data in, punching cards or into disks and etc. And they organize it in what we call hierarchical format. Don't worry about that, okay? Now that went on for a long time. And there were companies that had, like American Express, had over 50 computer centers collecting data about their clients, traditional data. But other forms of data started emerging. And with this traditional data, what you could is collect data of your clients, find out if they pay their bills, and etc. Then this thing called scanner data showed up. And what is scanner data? Is here. Uniform product code, and you can use a wand and just kind of zap. And what these bars mean is a number. And so now we know that we are ordering or we are buying in a supermarket orange juice. Now why did they develop this? They developed this basically to manage inventory in supermarkets. And by the way, the supermarket industry resisted. They didn't want it, barcode. But after a while, it worked. And what this basically allowed them to do is answer certain managerial questions. What did you buy? What products relate? Can you predict results? Can you control inventory online? Can you keep real-time inventory? Can you audit inventory real-time? Now, the most important question for them was trying to relate what's being bought by who bought it. Because if they had your name and they had what you're buying, they understood what your clients' needs were. And so they were linking hand collection data with semi-automatically collected data to scanner data. And so they did all kinds of studies. For example, they did this data mining study by correlation, and they found out that people that buy diapers also buy beer. Okay, high correlation between the purchase of diapers and beer. But people that buy beer didn't necessarily buy diapers. Now, once you see that person that buy diapers buy beer, you think about this and say, yes, you have small kids, you're stuck at home, so you bring the beer home, you don't buy it in a bar. Does that make sense to you? So this is actually a discussion I always have of correlation and causality. Okay? Just because two things are correlated doesn't mean that one causes the other. You find a correlation between maternity in the United States and sex life of monkeys in Africa, which probably exists because those are growing populations and etc., you cannot infer that they are causality. What creates the causality in correlations is a good logical explanation of why they are related. And you know, I just recently, maybe a year ago, 2 years ago, saw an article on the New York Times. Is it a good newspaper, New York Times? Great newspaper, okay? And they had this whole thing about women are progressively going more to work, but not anymore, kind of plateaued in 26%. So now the trend is for women not to continue going more to work. That's just bad analysis. Why? Because those were the years after the 2008 crisis that everyone was getting much less jobs. The fact that the growth of people going to work plateaued is because everyone was staying more at home because there were no jobs. And after that, it of course started continue growing. So be very careful when you read studies. Do you remember the other one who's saying the thing about using Google to detect epidemics?
To predict flu epidemics.
Yeah. There is the U.S. has a center in Georgia that actually tracks epidemics. And then there was a study that basically used queries into Google to predict flu epidemics. And then it was totally criticized because there were much more flu in New York than in Alabama or whatever, and the study is wrong. Turns out that the guys who were criticizing didn't normalize the data. And when you normalize by population, there is absolutely no question that Google predicts epidemics much better than at least much faster than the center in Georgia. Okay, so be very careful with data analytics used by people that don't know what they're doing. Okay, the third source of that web data is web data. First source of this data is web data. When you connect on the web, let me find a place in the blank. Here is the internet. Here is a website that you're trying to access. You're sitting here. The ISP knows where you're trying to go, and this guy here tries to know who you are. And this is very valuable information because it can help your analysis in things like click path analysis, multi-URL analysis, meaning click path analysis. What did you click before you buy? If you know what people tend to click before they buy, you try to get them to do that clicking, or analyze why they left a lot of things on the computer and didn't buy. So that's the kind of analysis you can do, but think about this. You first link your traditional data, figure out who it was, to what they were buying. Now you're connecting it to their behavior on the internet. And then the next thing, you are picking up where they are with the cell phone. You all know what GPS is, correct? This is something that you don't need to be taught. GPS identifies where you are. Actually, the phone companies have another technology. It's called JIP, and is a triangulation between towers. So even if you disconnect GPS, they still know where you are. Because you are here, there's a tower there, there's a tower there. Your signal gets weaker there than there. By triangulation, they find it. Nice pattern, maybe not as exact as GPS, but pretty close. But this is very, very powerful knowledge for your data collection procedure. for your data collection procedure. So now look at this. You know who the person is. Do you know what they buy? You know what websites they access it, so you can predict some of their behavior. And you know where they are located by mobility data. So what I always tell my students these days is, don't worry about privacy. Privacy is gone anyway. And by the way, there was just an article about 14 things about you that Google knows. I'm going to send it to you. You're going to find it scary. Very scary. And if you are taking my technology course, you would see about what the National Security Agency knows about you. But complementing about, forget about privacy, you lost it already. Don't worry too much about it, because you are not very interested. Yeah, they collect data, and that big data is expanding so rapidly that at the end the NSA, for example, collects less than 1% of the data that they really could collect. Okay, and then the second thing is they don't have apps to really interpret what you are doing. And so what really finishes up, I'll give you the example I always use is the Boston Marathon. You guys won't remember this, but about 4 years ago, they put a bomb in the exit of the bomb, 2 bombs in the exit of the Boston Marathon. And there is a film about it just coming out now, okay? And basically it killed a couple of people, injured a lot of people. Now, Boston didn't have a database of the pictures of everyone in Boston. So they couldn't, and what they had is cameras in that area, and they managed by manual examination, see 2 people that were dropping things in the garbage can that they knew had exploded, and they figured out this was the guy. These 2 people was one person that was the same. Okay, so they knew the picture of the person, but they didn't have a database to compare. So they did something very, very dangerous. The group sourced it. They picked up the picture and put it on the public domain and said, do you know this guy? And they very rapidly got information who these people were. From people say, oh, I know him, or et cetera, et cetera. At the same time, caused the life of the poor MIT cop that tried to arrest him. Okay, this guy identified him, and he pulled his gun and tried to arrest him, and they killed him. Okay, but after that they kind of knew where they were, and they rapidly found it. But this is the story that they invested thousands and thousands of hours, meaning millions and millions of dollars, to identify, to break the privacy of these individuals, this one individual that had put the bombs in. And that's what I say is, costs a lot of money if you don't have an app preset to do a particular function. And the other thing to remember about privacy and about these particular factors is that no one will do anything for free. And therefore you only develop an app if you think you're going to make money from it. The Malaysian airliner, do you remember the one, Flight 70, that disappeared? They had 6 different streams of information coming out of them. They have the transponders of the plane, which are these little devices that are there to avoid them to collide with the other ones. The engines had data streams going to the manufacturer of the engine, basically for maintenance reasons. Telesat had locational information of them. How is it possible with all that source of information they don't know where the plane was? First, there is conspiracy theory. Strategic Air Command of the United States and the Chinese knew where the plane was, but they are not telling. Is it true or is it not true? Most likely true. Strategic Air the last thing the Strategic Air Command wants to do is to tell people what their capabilities are, that they can track them. Okay, but maybe not. Okay, certainly the Malaysians don't have the tracking abilities, but Telesat wouldn't take too much of them to do that. They just didn't have the need. There wasn't a market to sell the information where a plane is at this particular moment. They still don't know it. They still haven't found the plane, how they found pieces of it. But this is the kind of privacy story. The privacy story is that a lot of information there, but this information is going much faster than our ability to detect it and to use it. And only applications are going to be developed that have a reason, that have a source of making money.
So one of the applications of big data is forecasting, right?
Say that again?
Forecasting. Like you can use existing data to forecast what is going to happen in the future.
It's called predictive analytics.
Predictive analytics. But if you have, so is it a data dependent function? So if you have more data, does that mean your forecast is necessarily better? Doesn't that also include a big cost that you have to process more data?
Just because you have more girlfriends doesn't mean that you're happy. Okay, it depends on the girlfriends. Okay, is that correct, Hussein?
I'm married, I cannot answer that.
In general, the potential, yes, having more data, relevant data, would improve the quality of your forecast, in general.
You just need to make sure that it doesn't include any nodes. This is what Miklos mentioned earlier about you have to be careful about the data itself, quality of the data.
The data has to be reliable, but I don't think with exogenous data is collected independently, you don't have the validation problem you have with internal company data. You can trust reasonably that weather data, that kind of thing, comes in very large volume, is reasonably reliable. So the problem is collecting the data, the problem is developing models to use it, and sometimes the data adds, sometimes it doesn't. Depends on the model itself. Okay, and there is some value on doing models that are simple. Okay, sometimes robust models are very simple models. But in addition to these four things, and this slide is incomplete. I recently added number 5 here, which is IoT, Internet of Things. Have you ever heard of IoT? Internet of Things. The internet today, I know you have heard it, but they seem very quiet here. Internet of Things is using the internet to connect things, not people. Like, for example, you're driving home in your car. Your car connects with your house. In your house, it turns the heating on. Then it tells your refrigerator that you're arriving. You have a little robot, goes there, picks up the pizza, puts it in the microwave. Or you left the microwave on and you turn the microwave on. Okay, I'm joking, but I'm not joking. Okay, refrigerators, heating systems, etc., progressively are more and more interactive. And they will be talking to others. Predictions by Goldman Sachs are that there are going to be around 20 billion IoT devices connected on the internet by the end of this decade.
And there's a huge concern about IoT devices in that they were used last month, a couple of months ago, in the DENS attack. It was IoT that actually brought down Netflix and a lot of the big part of the internet.
Okay, let me back up and explain what Hussein said here. They had the thing called denial of service attack. What is denial of service? Is when you send internet messages, packets, into a particular location, like he said, Netflix, and you send so many that it kind of chokes up and cannot handle it and crashes. Rutgers had two big denial of service attacks in the last 2 years. Big ones. Okay? And people do that just to be nasty. Okay? Or like, for example, you want to punish a company, punish Sony for something they did against North Korea. So North Korea attacked Sony. Okay, and what Hussein was talking is there was this story. There are these cameras sold by a Chinese company, and these cameras were polluted by a virus, not exactly a virus, but a device. Okay, and
Malware.
Malware.
man web.
Malware.
Oh, malware. My English is not good.
It's not.
Was polluted by malware. And basically what these things did is when a tertiary person, sent them a signal, it started sending packets wherever they told to go. And this basically the Chinese company admitted, saying that we send every device with a standard password that has not been changed. So anyone that knows that standard password, go in and could put a piece of malware in there. And this is actually going to be a bigger problem in the future than is now. This is a expanded problem because there are all these things, this cameras connected. You know, my wife is obsessive about her house in Long Island. Okay, so she has the house with 3 cameras. Okay, and she feels happy being at her work, putting her iPad there and seeing for hours in a row the house. There is no one there, but makes her very happy. Okay, and she's now went yesterday to Brazil. She's probably going to be watching our house in Long Island from there, see if I'm behaving in the house. Just joking. But this Internet of Things are usually added to the, but he has a lot of very interesting information there. Okay, they can detect weather patterns, or could be just a camera sitting on your parking lot. Just imagine here, we are here at Rutgers, okay? And there is a parking lot in the back. You put 3 cameras over there. You have 2 ways to secure that camera, parking lot. Okay, one is put guards sitting over there, like we have now. Or you can have a guard sitting in a room with 20 screens, monitoring. Is probably having a nap and eating a sandwich because it's nearly impossible to monitor things. Or you can have software detecting the face of everyone going into the parking lot. And then you have a database of the faces of all our students. It recognizes 95%, it's pretty good, soft face recognition. And then you have the faces of the professors. And then, if you are not a professor or a student, what are you doing there? Or maybe a staff member, what are you doing there? So just calls exceptions to the faces. You could also have a list of bad guys that you know that steal. And if one of those shows up, you immediately sound an alarm. But you can connect those things to all kinds of applications. Some of them good, some of them not so good. Now, the next thing on this slide is actually the big 3 receptacles. I usually put them together. One is basically videos, the other one is audios, and the other one is text. And these 3 together can be linked. Like I just gave you the parking lot example. You could have security videos connected to identifying if your clients are coming in, giving them information, or giving yourself information to sell for them. Okay, you can pick up everything before you go to an interview. The employer can say, oh, your name is Lee. There are many Lees, but yeah, there are a little bit less, and you live in New Jersey. Okay, let's have a look if we have anything on the internet. That's why I tell my MBA students, be careful what you post in the internet. If you go to a party and you get a little bit wild, don't post it on the internet because the employer is going to find it eventually. And even if it doesn't mean anything, you just drank a little bit too much, it's not good, not good. But progressively what's happening is that the boundaries between the external data and internal data are becoming fuzzier. And what I'm showing you here is what I call the bridges. You link a video to your to your traditional data. You link social media userlinks into your traditional data. And then you needed to scanner data, to web data, to mobility data. You keep linking these things. And progressively, again, costs money to take your privacy away. So people are only take the privacy away in the situations where they can make some money, or it's a security reason, or a religious reason, or something that matters a lot to people. Okay, now this is, I can see that's a little bit too dark. This is actually trying to link the pieces of your business, marketing, property, the sales, supply chain, accounts receivable, etc., to external sources of data. And you mentioned fair value. Actually, fair value is kind of a modern method of valuation. And fair value was very difficult to do before. FASB had a statement called FASB 33, which was current value accounting. And why did the FASB have that? Because there was a period in the United States that inflation went to like 18%. And so they started thinking that they needed to revalue everything. But the moment that decreased, they forget about FASB 33 or ASR 190, which was the SEC rule on current value accounting. But are you really, this building, we have been here for about 8 years. Are we interested on what it cost 8 years ago? Or you are interested on what you could sell it at this moment? Only person interested in how much you paid 8 years ago is the IRS. Correct? It's only about deduction in taxes. Has no value. However, the assets you have that could be liquidated are of a guarantee to the people that you owe money. There are all kinds of values to it. So the idea of linking real-time media and real-time information to your supply chain is a very powerful idea, and there are a lot of applications that are emerging. Fair value is just one of them. I want to talk about a couple of other things here. GPS, you know what it is. It's a locational device. RFID, do you ever heard about RFID? RFID stands for radio frequency identification. Okay, and it's a chip. Okay, and what does it do basically? It basically, when you throw a certain frequency at it, it responds or not. So it's exactly the same thing as scanner data. Okay, is you throw it a frequency, instead of having to scan it, the chip responds with this number. And so if you are driving in Manhattan or driving in New Jersey, have Easy Pass. What is Easy Pass? It's a little thing like this with the RFID inside it, and when you go to the booth, it kind of sends a signal, it sends say, I remember such and such. And then it immediately goes to its structure there, and bills your credit card. Okay? So it's kind of trying to link different things. So the RFID is this chip. And the chip used to cost like $1, $2. Now it costs 2 cents, 1 cent, half a cent. Actually, they have RFIDs that you can stamp on your arm. Now, an RFID allows you to put a chip on this thing and don't have to look at the barcode. You just send a signal, it responds. So you have a big pile of inventory sitting over there, you press a button, you get how many items of inventory you have. Is that useful or not? No, yes. Is it or not?
Yes, at least as far as I know, it can hasten the checkout process in the supermarket.
Okay, and actually there are some stores that actually have self-checkouts,
Yes.
and the self-checkouts are not anymore that you scan each one. You actually just drive out of the, you see some advertising now, some stores are advertising that. You don't have to scan anything, you just walk out and it
Yes.
charges your credit card.
Yes, and
Okay,
instant
that's
payment.
RFID. Okay, and so what I'm saying here now is something a little bit more problematic or interesting, is that you can link pieces of the big data media into pieces of your balance sheet. Like, for example, number of mentions in social media might be correlated to sales. Negative mentions and sentiment in social media might decrease your sales. Okay? You can link your security videos of trucks coming in and out of your facility to your supply chain. So progressively, these things are going to be more and more linked as validation. So we actually ask this question sometimes, is can you audit a company without going into company and looking at their data? And then the answer at this moment is obviously no. But maybe you can already use third-party data in certain processes that are highly correlated to give you an indication if the numbers are reasonable or not. And progressively, more and more IoT and other sources of information, you'll be linking more and more to that. And maybe you'll do accounting too, not only auditing. You'll be measuring things by tertiary data. Interesting question, not sure. We don't know what the answer is. But there are a lot of linkages. And you're going to like this linkage here. Because there are these business-to-business markets, and there are these business-to-consumer markets, like Amazon is a business-to-consumer market, whereby you can pick up the price of anything current in the current price. There is a little problem of aggregation. Are you measuring a car, or are you measuring the seat in the car, or you're measuring the wheel, or you're measuring the thing inside the tire? Okay, so you have to decide that what you're going to measure. But these things are available. The other question to ask here, is this a wholesale price, or is this retail price? Is this a used price or a new price? All of these things will have to have rules, but we have some of those rules already. And what I try to do is put some equations here saying customer service proportional to emails received, social media mentioned. And so you can create some equation. Actually, we wrote a paper published in the Audit Journal, Professor Kogan, myself, and a couple of other people. And what we try to do is link the different elements of the supply chain by a set of equations. And in theory, you could create financial statements that are not numbers, but they have equations relating things. We haven't tried to do that. That's a dissertation waiting to be written one of these days. So, one more comment. This is a boundary comment. This data is so big that you can't really copy it and store it like you do with traditional data. What you have to do is bring a very small portion out of it into your boundary, extract what you need, throw it away. And the other thing is, the issue is not necessarily the data existing, but the issue is availability. Because, for example, Facebook won't let you access certain types of data. Okay? Twitter, the same kind of thing, and et cetera, et cetera. And actually, Facebook, Twitter, et cetera, have a big business selling you data. And so, don't start thinking of collecting that data for dissertation very easily, because it's very expensive. But there are other ways to do it. Yeah.
So I have a question about bringing data to the boundary. So something like text mining, what you do is you have a lot of text and you run some kind of algorithm and you bring some of that relevant text into your boundary data and use it in your analysis. But is the marginal contribution of that data worth the effort of running the algorithm on all that text?
I think the answer there is the same as you also asked question before. What is the data and what does it mean? Okay, I'll give you an example. You know, you're going to customs, and there is a lot of people that are being face identified, costing you a lot of money to keep the infrastructure going. Okay. However, if once you deter a terrorist attack, this would, correct? But it depends how big the attack would be. So it's very difficult to a priori. But you know, certain companies will save a lot of labor by doing some of this, and then it's obviously it's all a question of probabilities. Although people don't think that way. Okay, just. Back to the boundary, you also said something that I neglected to mention. Typically, this type of data is unstructured data, and the data in here is structured. Okay? Typically, here is manual collected, here is semi-manual collected, here is all automatically collected. And progressively, the boundary for automatic collector comes to everything. So we are getting to an age that all your accounting data will be manually collected. I'm going to send you an article, say your accountant is a robot. And what this article says is basically that most of the bookkeeping and ledger type of functions are pretty automated these days. Where you start having human intervention is in adjusting entries, just to begin with. But there are many other things that are automated today at the higher echelons of data management, accounting, and etc. And actually there is an article talking about automation of professions. It's a McKinsey article, and what they talk there is like 62% of chief executives will be automated. That's not the number, but they go to this whole set of professions and how they be automated. I know that I mentioned this, I have to send it to you. You know, when I talk about automating auditing, my PhD students, no, not my PhD, my MBA students look so sad. Where goes my job, etc. And don't think that way. It's still not there. Okay, it will be a little while. Okay, and I do think that there'll be a creation of all kinds of peripheral functions for assurance that auditors just don't have the time to do today. So I'm not totally sure if these kind of jobs really are going to shrink the way McKinsey is predicting. Okay, so I'm missing a slide here that I wanted to show you. So I'm going to do it manually because I don't have time to look for this slide. What are auditors required to do at the end of the year? They are supposed to go to the warehouses and count inventory, correct? So your balance sheet says I have 100 of these items in your balance sheet. You have to go there and count. Okay, so that's a year-end function. This is your inventory. So if you put an RFID into each device, you don't need to go there anymore. What do? You press a button, It gets irradiated, the response, how many items are sitting over there.
The auditor need to make sure that one product is only has one RFID on it.
Right.
Yeah.
There are, stay with that because that's a good point for a little bit later. You thought ahead. So you irradiate here. So first thing I always say, remember I said privacy is there. Second thing that I typically say, just wait for a second. The second thing that I typically say is applications have a weird cost function. Okay? Develops a lot of money to develop an application. But with computers, the incremental cost is very, very small. So you write an application to manage inventory. It's a fixed cost. You write the programs. But then the programs to run it every day are very cheap. And that's kind of generic now in this hardware and software domain. Hardware is also reasonably cheap, etc. So the incremental usage tax is very low. So you are measuring inventory once a year. You could measure it once a month, just to have the right numbers in your monthly balance sheet. You could measure it once a day. You could measure it once a second, once a millisecond, or microsecond. Now, you're not going to do this because you're going to accumulate information unless you have a use for it. And again, you have to make a buck or save a buck to be worth doing this. I always say, that's why I just want to give this explanation. I always say that people don't put in RFID supply chain technology for accounting. That's a second thought. They put it in for managing the supply chain, but it's there for you to use. So the next thing behind this is you can decide how frequently you do this. The next thing is you could put a detector here, and when the item arrives, it activates your computer, said one arrived. So you have an RFID detector in the entrance. You could put an RFID detector going out here, so when anything goes out, you detect. You connect this here to your supply chain measurement. You connect this here to your cash register. So now you have your physical inventory connected to your purchase mechanisms, to your collection mechanisms. Now, one thing you can do is go to your supplier and say, let's make a deal. I want to measure when the thing leaves your shop. Okay, so here is your supplier. You put a device in there. So you know when this was issued, you know when the purchase order went in. And these are all Internet of Things connections. So now you know very well if your trucker stopped to visit his girlfriend and a few pieces of inventory disappeared. Correct? Yes or no? Yeah, because you measure, you know how many left here, you know how many arrived here. You can also do the same thing with your clients. And so you know if anything disappeared, how many were delivered. It's like the three-way match in a very automated way. So what do you detect out of this? That progressively your purchase to pay, order to cash, they're all going to come together with IoT devices. Now, tell me if this is going to be a lot of information or not. Depends. Are you collecting it every second? Every day? Every month? And you're only going to do it if it's useful for you. But do you understand how auditing will change and how accounting will change? Notice another thing. You are not keeping inventory in one place. You're actually keeping inventory in your supplier, in your clients. This is Bloomingdale's. They sell blue jeans that you make. Okay? You can have controls of what's in their shelves by knowing what they sold. They know how many were stolen. Now, then someone, her friend, comes in and he picks up 100 RFIDs on his pocket, walks in here and puts it on inventory. No devices with it, just RFID. So that's what? Fraud. However, you have a badge on him. You know who was there, who walked in there when that was delivered. Now, what I always say, this is my third axiom, I always say technology give it, technology take it. What does that mean? Is technology gives you a facility. At the same time, it creates an opportunity of fraud or opportunity of something bad. And it's up to you to have the controls in place that manage this particular problem. Now, talk a little bit about this technology given, technology taken. You have a computer center, big computer center, and you want safety. You get it. You put your computer center in a room like this. Make very sure the walls are thick enough. Floor is cement, top is cement. Put 2 guys with machine guns in the entrance. And strip search someone that walks in and walks out so he can't take a piece of paper out. So you have a lot of security. But the thing is useless. You can't access the computer, you have to send someone there. So you want to get some practicality. You put some wires into the computer. From 1 second to the other, what happens? It's much more practical, but it's much more dangerous. Okay, because you already now you have to password it. You have to make very sure the passwords are legitimate. You have to manage the password. You need to put a log to see what information is being accessed. You need to have a person that accesses that log. This person is a liability too. So life gets very complicated. So this is the whole question about technology given, technology taken. By creating facilities, you are making marvelous things happen with technology. At the same time, you are creating your exposures. Are we good up to there? So this is something for you to think carefully in all the story of technology and technology research. I want to talk about something I call piggybacking. You guys have computers at home, correct? Or laptops. And when you go to sleep, you leave your laptop on sometimes, correct? And what happens? Sometimes it restarted. And what was the restart? Was that Windows updated. And when you update Windows 10, it takes forever. Correct? It goes, wait. And then you not only have Windows, but you have Word. Word updates. Correct? And so you have all this software that self-updates. Have you figured out what that is doing? What is the story around this? You have Adobe Acrobat, it self-updates. Okay. What is this? Can you tell me? That someone else controls your computer. Have you figured that out? Have you thought about how many other people control your computer? And by the way, many software you apply, you say, can I automatically update you? And you say, yes, because we are too lazy to do the updates ourselves. Only my colleague, Professor Kogan, that goes to all those he updates himself every year. Even that is not a guarantee because he doesn't know what's coming down. That's one thing, okay? Second thing, how many devices you connect and how many devices you synchronize. It's your cell phone, at least your cell phone and your laptop. Correct? You have a desktop, you synchronize that too, and then you have a Fitbit. You know what a Fitbit is? This measures date, how many steps I give today. My heart is beating at 70 times a minute. I walked 1.33 miles, etc. This thing syncs on my cell phone. And when this thing runs out of battery, it sends me an email telling time to charge. And every week, just to annoy me, tells me how little I walked every day. Okay? And goes on. But it's third device connected. Okay? And they intertalk. And by the way, I never gave access of my Fitbit to my cell phone. Maybe I did. Maybe I put a password in it. I don't know. But it was a long time ago. I can't remember my password. And I hopefully didn't put the same password everywhere, because if they break it in one place, they break it in another. But actually what happens today is what I call piggybacking. You have your computer here. On top computer you have operating system. On top of the operating system you have Windows. On top of Windows you have a database. On top of database you have a query language. On top of the query language you have an application. Then you have applications that talk to applications. And why I started with self-updating is because that's a secondary access. You access your computer and Microsoft accesses your computer. Now think about all these things are layered, each one with a secondary access. They all have. Sometimes they have the thing called backdoors, and a backdoor is a piece of software that if something goes very wrong, one of the system developers can go in. Okay? So this whole idea of cybersecurity or cyber crises is inevitable because too many people, and remember there is a programmer for Microsoft that broke up with his girlfriend and moved to another city, and he still have the Microsoft passwords. Don't look so sad. It's worse than what you think. Even worse than that. Okay? So you start looking at this whole issue of cybersecurity. First, Hussein talked about denial of service. What is that? Just nastiness to break the entrances of the internet for certain companies. Then there is this whole thing of invasion. Okay, and then there is this whole thing of some people going into your computer and encrypting your entire computer and say, if you don't pay me, I won't decrypt the computer. So you lose every information that you have in there. So these things, this kind of problems is arising, but you cannot live without your cell phone or your laptop, can you? So this whole problem of cybersecurity is here to change, to stay. And hopefully we are going to do some research on this. Just wanted to show you, summarize some of the things we talked about. Okay, on that big data thing. Identification of location. Identification of you. This thing, temperature, pressure, and movement. other things that you can do. Just in that, there is much more collection than that. You can derive. You see where she's located in GPS. If the location is very close to him, you know that they are next to each other. Okay? It's derivative information. That's not said in this information, it's not said in this one. But you can compare the two. Does any one of you uses Waze? Oh, Waze is a great app. Free.
Please.
Because you guys don't drive. If you drove, you would know about Waze. You go to many, many different countries with the Waze. What is Waze? Waze is actually a group sourcing information, whereby you are driving somewhere and you have the app on. The app identifies where you are, realizes in what street you are, and depending on the speed that you're going, it predicts how long it takes for you to go in that street. And then you say, I'm going from here to Manhattan. It looks at the path, predicts the speed of communication, and tells you how long it's going to take. I drive home in a couple of hours. I turn Waze on, and it tells me if I should go to George Washington, or to Midtown Tunnel, or to Lincoln Tunnel, or to the Holland, because it calculates each one of them and tells me what's the best. Every time I say I'm smarter than Waze, try to do something different, I screw up. Okay? At least most. Sometimes not, but most of the times I do. But now Waze is very interesting if you start thinking about it, because it really brings your information, his information, and a lot of people's information together in a story, a group sourcing story. It's a wonderful application. It was sold by, I think, for $1.1 billion to Google, and it was a company, about 7 people that developed it. So it's not bad, huh? $1 billion divided by 7. Okay. This is like my nephew, not exactly my nephew, my best friend's son, who's godfather, who sold his IT cosmetic company for $1.2 billion. Okay, it's just unbelievable what people. And by the way, L'Oreal bought it, and will be worth it for them. Worth it. But Waze is this story, and so now Google has it. And Google put distance-sensitive identification of routes into Google, but Waze is still better. I love to compare these things. Okay, I'm driving to Long Island, bored stiff, and so I have my car turned on, my computer, and my cell phone. My cell phone Waze, my computer in Google Maps, and my car identification there, and I see which one does better. And Waze does always better. Most people agree, yes.
Does Waze do anything like, say it recognizes that there's several mid-closes all going from one point to another, and sends some one direction, some another direction to like manage traffic flow?
It's not, no. But I thought you were driving in several mid-closes as someone stealing my identity? No. No. Waze basically uses information they have in every location about speed of transportation, and then aggregates that into a story of you want to go from here to there, how long it will take you. And if the traffic conditions change, they have an algorithm in there, a certain way it reroutes you. It's pretty smart. Now, I want to just talk about Waze for a second, because it's a good illustration of this stuff. The world is now being run by algorithms, progressively more and more and more. And just having the map allows you to find the shortest distance to go to somewhere. The moment that you have the map and you have the speed that people are driving, your algorithm has to be different, correct? Because now sometimes the shortest distance is to little roads in Hoboken instead to the highway. Okay? So that's the speed. Next thing that you could add is your driving habits. I have the tendency to drive fast, drive slow. I stop to have a beer or whatever. Not a very good idea. Next thing is I'm going home. It's at 6 o'clock. And so it says it's going to take 41 minutes to get to Midtown Manhattan. By the time I get there, it takes an hour. Why? Because in that 1 hour, the traffic pattern changed and everyone is going home. So what most of this algorithmic work exists is a whole mix about historical information that you can use for projection and algorithms that you put together and certain assumptions that you make. And the good algorithm companies keep changing the algorithms, making them better. I'll give you another example of algorithms. Siri or Alexa. Do you know Siri? Everyone knows Siri. You know Siri? In your cell phone you speak, hello, hello Siri. Okay? Do you know Alexa? Alexa belongs to Amazon and they have a device called Dot. Okay? And it's a little box like this. And you say, Alexa, good morning. Say, good morning, they close. Okay? And say, Alexa, play me some music. It plays some music. It's still not terribly useful. You can shop in Amazon. You can get special deals. A lot of music. You say, Alexa, wake me up. You don't have to be polite. You can't say, Alexa, could you please shut up? Say, shut up, Alexa. That's okay too. Okay? And every time I speak on the internet with Alex, Professor Kogan, Alexa thinks I'm speaking to her. Alex and Alexa. And it's on all the time. And it's, I gave my 2 kids, their wives and husband, and my best friend Ricardo, they all got Dots for a Christmas present for me. Because it's so much fun. You talk to it, you get free music from Prime. You buy a little device and you say, turn the light off, turn the light on. Okay, it does a lot of nice things. And you every week get a mail from Amazon saying the different things that Alexa can do. And the interesting thing about it is that what they are trying to give you the device nearly for free because they want you to shop in Amazon by voice. And they think that everything is going by voice. So now Google has a device, Alexa is there, and of course Apple has a device, and they are competing on this voice-enabled domain. Very, very interesting. Remember, piggybacking. One application on top of the other one, on top of the other one, on top of the other. I haven't heard any fraud or any nasty things about Alexa yet, but don't worry, it's coming. Someone will figure out something bad to do with it. Jamie.
So my girlfriend and I were talking about Alexa this weekend because we were talking about a court case where they were trying to use Alexa recording to prove if the murder was premeditated. But the point was, if you have someone like named Alexa in the room, or like you have with Alex, what do you do? Do you just tell Alexa to turn off?
I don't know. I think this is an algorithm that you have to call them up and suggest to. No, I think you can rename Alexa. I think you could call Alexa Jamie. Okay, I am not totally sure, but I think you can rename. I remember hearing something like that. You can rename. But you said something else more interesting.
Yeah. So the court case was about a guy that had killed, I think, his brother-in-law or something, and the police wanted to prove that he had premeditated the murder. So they applied for a warrant to get all the Alexa recordings, and the court determined that since it was like a blind warrant, they wouldn't issue it, but there was no ruling on if you were to say murder someone at a specific time and the police wanted to check the recording at that time. What if
I was under the impression that both Google and Amazon promised that they are not going to retain the interactions. They are going to use it for that particular instant and not keep it. Now, what you said is very interesting, because there is a classic Samsung story. Did you remember that case where the voice-controlled Samsung TV, turn on, turn off, was recording what was happening in your house, and they were keeping those recordings. And there was a big scandal about that among the people worried about privacy. and that was disconnected. They say that they're not collecting that anymore.
Well, I mean, the data was definitely there because the cops said that they had the data, but they couldn't actually go in and access it without a warrant. And when they applied for the warrant, the court said.
So they're keeping the data. That's when he said that, I was, they're keeping that. Because, you know, the Samsung case is the classic case. That was before Alexa and before, etc. You know, these big TVs, they're fantastic. Used to cost $20,000. Now they cost $600, and they are voice activated. So you can just turn on, turn off, do voice activation. But what the thing was doing is recording everything going on in your bedroom, on your living room. Okay, and that was a fuss. And but you know, this is another thing to think about: is technology evolves, and legislation doesn't evolve with the speed of the technology. And meaning our work. These guys here, that one needs to do more work. But these two, he hasn't started working on our projects, but these two are already working the project. So I have a project for you, by the way. But he was traveling, so I couldn't find him. But our work is all about this. It's about rules, old auditing rules that are obsolete and hold back doing the modern things. And everything is like that these days, including accounting. You know, a lot of old rules retain this for 7 years in paper. There are countries that require you still to retain quantities of paper. Even the fact that everyone keeps recording, you have to print them out and retain it. In Brazil, several things. Okay, but this is all about technology evolving, making the old rules old and new rules. And governments are reasonably good at, not reasonably, very slow at creating new rules, but they are terrible at eliminating old rules. And so this is actually a big problem for the future, in accounting, in auditing, etc. I wanted to show you this. This is actually something that Germans developed in 2010, 2012, called Industry 4.0, and it was the vision of factories becoming progressively automated. And so actually June Day, you know her, okay, this is one of the chapters of her dissertation. We published a paper on this. And is audit follow? Pick up the characteristics that the future factory have and transmit and transform it into audit. So the first thing is this idea of interoperability, making the different pieces. And the example I showed you here is interoperability. You finish up making your RFID device, working with the devices in the client, and make your purchase to pay, order to cash, supply chain all work together, interoperable. So the same commands, the same set of things work everywhere. Virtualization is basically create services that are virtual, not physical. Decentralization is make a factory not being controlled by one center, but being many different processes working at the same time. She talks about service orientation. She talks about Internet of Things and talks about Internet of Services. And I'm going to send you audit 7, old audit 4. And so talks about you provide different audit services on a virtual basis in separate. And finally, everything being very modular. Okay, here's my slide. I didn't realize I had it here. And this is exactly the story that I told you. The inventory story, RFID and GPS, inventory reduction, inventory increase, connection to the clients, all related, and managing everything together. And just here talks about the cycles. Sales, suppliers, and this thing working together. Now, I want you to kind of take a bigger view of this. And remember, I had the whole business with supply chain in the middle, ordering here. All of those can be incorporated like this. But what's the most noticeable of this particular thing is this link and this link. Because these are an extra corporate, external to the corporation type of service. Now, auditing has this thing called confirmations. What is an audit confirmation? When you are auditing in order to verify that your bank accounts are well stated, what do? You print out the balances of your bank accounts, put it in an envelope, and send it to the banks. The banks need to look at that balance, look at the balance they have, stamp it, say it's correct, and send it back. Just think about how obsolete that process is. Now they can do it by email, but still is a manual verification. This is a total interconnected, same kind of thing. And you will never do verification. Why? Because it's constantly being verified. There is, have you ever heard of chips? There is this system to transfer money within the United States, okay? And basically you send wires away, and the government puts them all together and pass the wires to the different banks, okay? And it's called SWIFT or chips, okay? And it has an automatic verification mechanism because this is money traveling, and it goes to one account, comes back to the other account, and so you verify if they are correct. There is no reason why you can't do this within a corporation. But what the big difficulty here is this. Companies interlinked in common things. Now, have you heard about blockchain? I'm going to ask June to come and give you a lecture on blockchain because it's hot. Actually, I have two things in the syllabus here that are not in there. I'm going to get either Hussein or Professor Cho to talk about blockchain and talk about deep learning artificial intelligence. Because that's the kind of thing that we are doing now in research that's going to go into financial accounting eventually. Okay, but blockchain is, you heard about cybercoin, okay? Electronic money. Okay, so all drug dealers now are paying each other with cybercoins. Okay, different forms of cybercoins. Okay, and this is a mechanism which is a distributed mechanism, and you have a log, and after you get a block, you encrypt the block, and then you go to the next block, and many people are doing the same thing at the same time, and that's a very good validation mechanism. And so this is very hot. People are spending billions of dollars figuring out if they can do things in blockchain. And our part of the story of blockchain, I'm happy with my slides here. My part that I'm interested in blockchain. Oops, what happened here? So, this is my granddaughter. She is 3/4 Chinese. I just don't know which fourth is Chinese. I think his fat thighs here is more grandfather. Her father is a guy called Jimmy Chin. Okay, he has 1.5 million followers on Instagram, and he is a mountain climber, climbs mountains. And if you watch the Chase commercials this week, Jimmy Chin, and then there is him climbing. Did you see the commercial, Chow? Jimmy Chin commercial, and is a Chase Bank commercial. Jimmy Chin does Chase cards, but anyway, that's her father. Okay, and then you see they are wearing synchronized clothes, same color. Okay, and she rides him like a horse, pulls his ears, pulls his tails. He doesn't even move. He loves her. Okay, now, so what I told you a little bit was, I was talking about piggybacking. And piggybacking is this thing that you put one application on top of the other. And it creates tremendous security problems. But the value of this also creates fantastic things that it does for you. You don't have to go to Microsoft and update your software. Okay, it does all kind of things. Don't you get sometimes freaked out with your iPhone when it starts predicting what you're going to do? It's the predictive mode, and you say, how does he know I want to do that? Okay, and sometimes it's so wrong, you say, oh, what a stupid predictor it is. But it's very, 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 very powerful type of thing. Is the basically interlinkage of things. One thing I love now in the predictive mode that they have is I love the fact that I sometimes don't have someone's phone number, but it finishes up showing up because it searches through my emails and finds the name of the person. I guess that's what it does. Okay, but this integration of applications is extremely, extremely important, and it's going to come to our field of accounting and all. I want to show you stuff that we have been working with the AICPA, and we call it the Audit Data Standard. And the ADS who have been issued now for 6 cycles, order to cash, procure to pay, payroll, general ledger, etc., etc. And basically what this is data standardization. So if you have payroll data, you should organize it this way. And what is the purpose? The purpose is getting all applications, in this case accounting applications, to work together with the same standard. Backing up a little bit, the 2 most popular audit softwares are ACL and IDEA. IDEA is from Caseware IDEA. Okay, and they are a little bit like spreadsheets, but they have specialized audit function. They are very, very nice, and most organizations with any size of internal audit or external audit department, school, companies have buy these softwares. Either they buy ACL or they buy ID or buy both. Typically, like large firms will use the software that the client uses. But typically, KPMG uses IDEA, the other 3 tend to use ACL, but also have some version of IDEA. But when you're doing an audit, let's say aging of receivables or something like that, you have to write a script, which is the codes, the way the computer have to program it, and the beginning of it is formalizing the data, saying the format of the data. And we done a survey, and the conclusion we came with the survey was that the major difficulty that IT auditors have is the formalization of data, is because every organization has data in a different way. So starting from the audit, Center for Audit Quality, CAQ, and then, now the AICPA, we thought it was very, very important to standardize the audit data format. So you could have apps that you don't have to program, drag and drop. I started teaching IT audit before most of you here were born, okay? I joined, I'm not going to tell you. I joined USC, and I got there, and they say, you're going to teach IT audit. You know about computers? I said, yeah, I guess. And then they say, you're going to teach IT audit. I never had taken audit, nor accounting. I took one accounting course in my MBA, okay? But, okay, I'll teach audit, IT audit. And at that time, I taught the following. I taught, let's say, companies have computers. This is the argument I used earlier. Companies have computers. Everyone is going to be IT auditor in 10 years because is there anything else to audit besides computers? Okay, so I developed this program. I started by just using Touche Ross, Deloitte and Touche, Strata, and we wrote code for every analysis that we did. Then I taught the students, and then I wrote a code called Treat that emulated Deloitte Strata, in that case Touche Ross Strata, online. So it was kind of a cool type of thing, but each of these things were uniquely coded for that particular application and that particular company. Well, we did a survey 30 years later. It was Silvia Romero here from Montclair that did it, and we discovered that largest difficulty that companies have internally is access to data. You thought auditors get all the data they want? Forget it, they don't. Internal auditors don't get it either. And we found that only 15% of the auditors are IT auditors. So something is wrong in the whole thing, doesn't make sense. Manual audits today make very, very little sense. Okay, so when the AICPA came up with this, the people from, was built in there for me and why came out with the idea of the audit data standard, we thought it was a great idea. And this is the audit data standard here. So you have data in the company coming from many different sources. And you do an extraction to have always the same format. And then what you can have is all kind of audit apps. And these are the audit apps. And all what you have to do is drag and drop the apps into the audit plan, and the audit plan will capture the data they want. Forget about continuous assurance, we'll talk about this later. Okay, so this was the idea of the audit data standard. Standardization of the data so you can have apps. This is actually June's dissertation. June's chapter 3 on, essay 3 on her dissertation. And it turns that between when June started and now, maybe 2 years later, there are 3 vendors selling apps, including Caseware Idea. You can buy app for $150 on the website, but they use their own standard. So these 3 vendors have different standards of auditing, making life miserable for all of us. Okay, and when I talk to, we are very good friends of Caseware. They work with us, they support our conference for the last 10 years, they're good friends. And they said, you know, anytime you want, we'll change it. But other people have to change too. Okay, we are not going to be the only ones changing. So we are waiting. It's like, can you dance with me? No, only if you ask me to dance. And it goes like this, nothing happens. Okay, so we are waiting. But we think this idea of the audit data standard, very powerful idea. And we think maybe this is a dissertation to be written. This is being written at this moment. And actually what June is doing is a recommender model for apps. Do you know what the recommender model is? The recommender model is when you turn Amazon on, they say people that bought this also bought that. Okay, it's an algorithm, it's a method of marketing. And so she says people that apply this app also will apply that app. So that's her chapter, essay 3. So one of her essays is Audit for All, Her second essay is blockchain, and her third essay is going to be this thing. And she has already 5 publications. So you guys try to do the same. Correct? 10 publications. 4 years, 10 publications, doable. Yes or no? Let's try it. Don't look so sad. You get there. You get there. Don't worry. Everyone gets publications. Correct, Chow? Chow has publications. Everyone gets publications. More is better. Better journals are better, but don't overdo it. So this is actually June's view of all the data analytics, plans, explain results, find a report, and she's imagining a nearly automated system altogether. And actually, we have talked with Caseware idea about they doing something like this, and they're interested. It's nice. Okay, know what that is? I know this is heavy, that's why I'm joking a little bit. This is, do you see this lack of hair here? Then you know who this is. Okay, and you know what's happening here? We were in the Granbury Reef in Australia, me and my daughter, diving. And there's dive masters, the idiots. I think this is ridiculous. Get this basket here, put the basket down with fish heads, and open it up and the sharks attack it. These are all sharks. Okay, and when I saw that, I slid from where I was ready to die, so scared I was. And my daughter nearly drowned because she laughed so much of me, of me getting so scared. And actually they didn't bite each other, and then when they finished their meal, they went away. Some looking a little disappointed because they didn't get shark head. But we do a lot of diving, and we are not too afraid of sharks. Sharks are not that dangerous. Okay, I think we've done a lot. Maybe I'll stop here. Okay, next class is going to be Kogan, correct?
Yes.
And they know what they are supposed to do for their class?
Yes, I have uploaded the material in Blackboard, and you can also see the syllabus here.
You're going to like Professor Kogan. He's great. He's great. He might be tired next week because we are going to be in the mid-year meeting of the SCT tomorrow. No, Thursday, Friday, Saturday. He's doing a workshop for PhD students of the section. Anyway, thank you very much. I see you. I will be seeing you around. I tend to come to about half of the lectures, sit around and see what's happening. Okay? And if you have any questions, email me or email Chow Chow. Okay? Thanks.